Please welcome the panel on Future of Finance, moderated by Axios technology and business reporter Kia Kokolacheva.
All right. Well, thank you so much to everyone for being here. My name is Kia. I'm a reporter for Axios. I'm based out in San Francisco. And today we're going to be talking about the future of finance and everything being digital. And I have with me a group of amazing panelists who are going to be telling you about what's going on. So I'm going to have them introduce themselves. We're going to start with Ellie. So give me your name, what you do, tell me a little bit about your company, and then tell me your current favorite fintech app. And it can't be yours.
Favorite what? Actually, it is. We just saw it. So, hi, everybody. First of all, thank you for having me on the panel, and thank you to the attendees in person, as well as everybody that's watching us online. My name is Rosner. I'm the Chief Product and Technology Officer for Finastra. We are one of the largest fintech companies in the world. We provide banks with everything a bank needs to run, all the way from payments, treasury, capital markets, retail banking, lending, digital, and so forth. We serve customers all over the world. And the summary of the session for us is going to be our tagline: the future of finance is open. Mm-hmm. And my favorite app?
Yeah, your favorite fintech app.
Fintech app. I just do digital banking. I don't have other very sophisticated apps that I'm using.
All right, fair enough. Maybe you'll find some new ones today.
I need to. Maybe the app you showed us in the intro will be nice. I'm interested in buying some gold. Do you have an app for that?
Absolutely. Okay, Ashraf Rizvi. A lot of people call me Riz. I'm a longtime Wall Street veteran. Ran various large businesses at the big Swiss banks, Credit Suisse, UBS, and Swiss Bank Corporation. Ran the global metals and commodities businesses there, amongst others. Ran a multi-billion-dollar asset management firm focused on commodities. Started Gilded a few years ago, really to make physical gold functional. So use it to make it digital, mobile, and usable. So I like to think about it as trying to bring the 3,500-year-old instrument that people have always understood as the ultimate store of value, but bringing it into the 21st century by leveraging blockchain, a smartphone, and a mobile app, and making it possible for people all over the world, whether they're retail clients who want to buy as little as 1 gram, which is about $57 today, to central banks or financial institutions who want to buy thousands of ounces or tons, and be able to do it in a nice, simple, easy way. And so that's what we do at Gilded. We've grown quite a lot across the pandemic, over 100 people that we've hired all over the world. And we're excited to be actually coming to the US very soon here. We're launching the app here. And we're working on making some of the full functionality, like being able to even send gold, available soon. In terms of my favorite app, of course, the Gilded app, which I showed to the rest of the panelists, is my favorite app, so I'm going to have to stick with that. Thank you.
He's giving everyone gold, but I'm just kidding. We're not. We're not doing that.
Hi, I'm Claude Lopez. I'm head of the research department at the Milken Institute, which is hosting this event. We work on international finance, regional economics, and health economics. And I think what's going to be useful for this panel is the work that we've been doing on financial literacy and also data sharing regarding digital platform.
And your favorite app? Fintech app?
I cannot answer that question. I don't have any.
All right, Kutcher. I am a senior partner at McKinsey & Company. I am also our CFO. I've spent, prior to taking on the role of CFO, I spent 5 years as the leader of our tech media telecom practice, where I traveled the world kind of bringing the Silicon Valley mindset to how did tech companies disrupt many industries, one of them being finance. And so I think that's kind of the lens which I bring to this, is kind of the combination of those two. I'm assuming most people at this point know what McKinsey is. In terms of my favorite app, so I'm going to, in the spirit of kind of challenging gold, I'm going to go with BRD, which is where I have my Bitcoin stored.
All right, all right.
I like the competition, or early start.
Conflict on stage, I like it. All right, well, to kick things off, since we're talking about the future of finance and things being digital, I would love to hear from everyone, what do you think is the biggest threat or challenge to the finance system as we know it today?
Go.
Go for it, please.
So, look, you can talk today about the new distributed, decentralized financial system without talking about the risk of cyber, right? I mean, it's $6 trillion today. It's going to be over $10 trillion in 2025. Ransomware in the first half of 2021 was close to $600 million. So we just can't ignore that risk, and I'm sure it's been discussed a lot during the conference and in many other forums. With regards to your question about the biggest challenge, I think the industry is in a transformation. And the challenges are of how we're going to advance and progress those challenges while we're still balancing all the risks that exist with this new banking ecosystem, which is going to be going all the way from a centralized system with hub and spoke to spokes to hubs that go towards the outward of the network, all the way to a completely distributed system. So it's a completely different paradigm of doing business with blockchain and smart contracts, et cetera. And that's going to be the biggest challenge. How do we leverage those technologies to advance it for the betterment of everybody?
In terms of security, should everyone just assume they're going to get hacked at some point or get hit with some ransomware attacks? Like, is this just how everyone should live now?
Well, security is going to be an ongoing thing. It's always been a big thing. It's never going to go away. We always have to be concerned about it, and it's like a mini war. So there's a rocket, and there's an anti-rocket, and there's another rocket for the anti-rocket. So we have to be on the watch all the time. It will continue to advance.
All right.
So I agree with Ellie, but I'm going to add a couple of things. So interoperability, which I think is a big problem in that we have 180 currencies in the world, and largely 90% of all transactions globally in cross-border trade are done with dollars and euros. So two currencies completely dominate that. And so I think that world is going to change as we become more of a global, true global world. And then I think also very important will end up being the entire KYC process or AML process. How do we make sure that good actors are operating in the systems at the end of the day? This is a very big challenge that exists all over the place, is that you can always try to launder money or do drug deals. So this is going to be important from a regulatory perspective. And then the last thing I think that is very important that we have to always bear in mind is that there's still well over 1 billion people in the world who are unbanked. The financial system has completely left them out. And in this day and age, 21st century, that's a pretty depressing thought when you think about it, that over 1 billion people don't have access to basic financial services. And through technology, I think we can solve a lot of these problems.
Yeah, can I reverse your question? Because you said what are some of the biggest challenges, and I actually think we can look at these as opportunities. And I do think there's a unique moment. So take the financial inclusion in the billion. Like, there's an opportunity if you're thinking about it from sure, it's a risk, but that people continue to be left out. But it's a huge opportunity to find a way to include. I think cyber is a real risk, but it's also an opportunity to differentiate. I think. The nature of the risks and opportunities are very different depending on where you sit, right? This industry is going through massive disruption, which means if you are one of the attackers, it's a unique moment to really change the industry. If you happen to be one of the incumbents, how do I move at different pace? And I actually think one of the great challenges that the incumbents face is, how do I get the talent, right, and kind of the operating model to move at the speed required to compete with some of these attackers that frankly can move faster? And that, because you can't do this without that talent. So how do I attract and how do I kind of build that operating model? I think that's a huge risk or opportunity depending on where you sit.
Mm-hmm. Yeah, and because most of the evolution will come from innovation, that means come from the technological angle. It's a very different way of growing for finance. Inclusiveness, of course, is great because you can serve many underserved population, but that comes with a responsibility of educating them. I mean, this democratization of finance is great, but what it means to have access to a wide range of investment if you don't really truly know the risks that come with it. So that's the challenge, is from education to have the labor force, but also educating the consumer, because it's becoming more and more a consumer-centric type of finance. It's consumer-friendly. And of course, that leads us to the other notion, which is, okay, and data that you share, who's going to be regulating all those things. So it's a really interesting evolution because it's not from within finance. It comes from innovation and exogenous shocks. So, and those are fantastic opportunities, and solution may not come from within finance standard.
So you guys mentioned inclusion. Is blockchain just going to fix that? I mean, we've been seeing a lot of efforts from that sector.
Blockchain will... Go ahead, Eric.
Yeah, it's funny. I'd be curious because there's folks here that know blockchain better than I do. I wouldn't have said that's the first place I'd look for how you solve the inclusion, but others may differ. You know, I think just if I take the U.S. for a moment, and we've done a bunch of research on kind of the percentage of Black Americans that are either banked or underbanked relative. I mean, it's nearly half of Black Americans are banked or unbanked or underbanked, right? That's a huge gap. When you get underneath some of the reasons why, right, it's, you know, there's the way people look at credit, there's the way where the branches actually sit. I mean, there's the things, but there's access that you can provide through technology that you couldn't provide before. So how many of us have deposited a check via our phone, right? I don't need the branch the same way I did before. How many can do things over their phone to get access to loans that didn't? So I would have said that, again, parts of inclusion are going to come from technologies that are readily available and accessible today. I'm sure there's things with blockchain I don't understand, but I would have said that is actually quite different, although maybe it lowers the cost of transactions sufficiently that it becomes an inclusive technology.
Yeah, at Finastra, we invest quite a bit for financial inclusion. We're helping, I mean, the trading gap today is estimated to be around $5 trillion. And what we've done, we've developed an initiative together with the Intercontinental Exchange to provide funding for SMEs and micro SMEs. And by that, we're providing jobs, we're providing liquidity to businesses, and helping financial inclusion. In terms of blockchain, I'm just going to make a quick point about blockchain since you mentioned it. So blockchain and smart contracts, in addition to that, will be the foundation technology components for the new distributed finance ecosystem that's going to be created. So it plays a key role as the system, as the whole ecosystem of finance transitions from a centralized, very well controlled, to a completely, through decentralized with more hubs and spokes, but then to a completely distributed model. And blockchain is the underlying technology together with smart contracts to enable that to work effectively.
Yeah, so I generally agree, but I think this little device here is the single most important enabler in the world, in that this is what is going to make it possible for 7 billion people on the planet to access everything from education to financial services to anything they really need at this point. And so I think the smartphone or mobile device, of course, is the most important, probably the most ubiquitous instrument. Almost everybody will not leave home without it. They'll leave home without your wallet, but not your phone. I think the underlying structures will be driven a lot by the apps, which make it easy to do whatever it is you want. Of course, get a car here, use it to purchase gold, whatever, buy Bitcoin, whatever it is that interests you, financial services, modern day banking, all of those will be enabled by that. And I agree, of course, blockchain will be fundamentally transformative in that it will allow trust to happen between parties in a way that right now is very much centralized, and it can be much more decentralized. That being said, of course, that means we have to manage that whole issue of the regulatory side and the KYC and AML, because there's always those risks that when you can do a lot of these things, there's risks of nefarious activity that will have to be managed.
Right. You guys kind of talked about inclusion and education and all that kind of stuff. We've been seeing a lot of fintech companies come up and, like the PPP loans, and they were having better success at loaning to underserved populations and like that kind of improvement in the system. Is this a question of using different data, better data, and then what should the systems be getting ahead of?
Maybe it's just a question of actually using data. I think that what we saw from the history of the banking and the lending, there is a bias. There were a blanket assessment of if you're minorities and you're a riskier population. And now we realize that thanks to the smartphone and all that data that can be collected on individual behaviors, that blanket assessment actually doesn't apply. It was very biased, and we know that it was embedded in the system. But so it allows us to really look, it would allow to look at individuals and their behavior. And that will inform the riskiness of a profile, and suddenly that profile would lead to opportunities. So it's about collecting actual data and making sure that it's being assessed properly so you actually see the person in front of you. The good news is because everybody's looking for growth and naturally looking at those underserved population, it's a natural way of growing your business. There is the right incentives to make sure that those data are collected, and technology is also there. So there is a combination of factors that really should lead us to the right direction, and also awakening of, with all the social unrest that we saw, there is finally awareness of a core issue that was part of our society, not only finance.
And I think this builds on where you were going. There's no question that data and analytics will help. Mm-hmm. We should also recognize that if the data has bias, we will get to more biased answers as well. And so there's a big question about how do we continue to de-bias as we kind of build more analytics and more AI. At the same time, I would argue, if we know that there are some inherent biases in the data, we can begin to plan for that. We already get better answers. So I think what people have to realize is this is not going to be an instant, like we're going to go from here to here. This is going to be an evolution, because as we get better data and we get better analytics and we get better models, they will continue to get smarter, and hopefully we will continue to be able to de-bias them.
Algorithmic bias is a challenge. We've partnered with McKinsey to put a white paper in place, and we're investing quite a bit in preventing algorithmic bias, but it's a problem that's going to be an ongoing challenge for the industry. If you take a step back and you think about some of the key, I would call them enablers for the financial ecosystem moving forward, you have to mention the public cloud, which is going to be the dominant deployment model. And along with it come infinite computing power and the concentration of data. And with those two, you can do a lot of innovative things. Mm-hmm. And I would call it customer intelligence. Yesterday, there was a panel in the CEO of EXO, I think if I'm pronouncing the name right. What they provide is a solution to take data from multiple silos and put it together. So with that comes a lot of power in the financial. For CFOs, I read an article, they call it extreme analytics for the CFO moving forward. But as the members here mentioned, we have to be careful about how we use the data, because eventually even the AI algorithms are written by humans.
Mm-hmm. Is there a risk of accidentally building a new system that's different, but potentially just as
biased,
exclusive or exploitative?
Well, I think the decentralization of the system, the fact that it's a lot of innovation come from a lot of different places, geographically speaking, different background, by design. I think that build resilience against those type of issues, because historically speaking, the lack of diversity in people, but that means in thoughts, lead to that inherent bias. So I do believe that there's less chance, and maybe we learned something from the past. I don't know.
Do we learn anything ever from the past?
There's always risk of, you asked a question of, the answer is absolutely, there's risk of that. But I also think this comes down to how much are we conscious of these things? And so the more we're conscious, the more we can begin to orient towards that conscious and fix them. I think the question is what things we don't know, right? And so I think it's constantly being able to look for those. And I think we'll get better at it. But I think we have to just be very aware of it.
Privacy is obviously a huge topic when we talk about data and people's data. What should we be thinking about in terms of, do we need new frameworks for that? Who owns my banking data or my gold selling data?
Yeah, privacy is always very important. So one of the complications I think that exists right now is that different countries have very different rules. And so as an operator who's in about a dozen countries, we have to abide by different rules in each geography. So that's challenging from a business perspective. It's also challenging from a client perspective in that we're in a global world. People are now moving. Ellie lives in 2 different places. A lot of people have multiple residences. Sometimes it's not always just in the US. So that's a challenging aspect, not only for the vendor, but also for the client. But I think the good news is that with technology, we'll be able to do it better. The challenge is that the regulatory environment is pretty fractured, and so you have to kind of adopt to each country and their specific regulations.
Sorry, go ahead, please.
If you look at the relationship of, let's say you take social networking platforms, right? And if you look at the relationships that they have with their users, in the beginning, they're attracting you to use the platform. Mm-hmm. But right 10 seconds after that, they're extracting your data. So I am, and Finastra is in the view that the users, the producers of the data, should be the owners of the data and have all the facilities needed in order to control the usage of their data. To that effect, and data is a critical component of our strategy in our company because we see data across multiple institutions. To that effect, we've built a zero-trust data platform. A zero-trust data platform where the banks have full control of the data. They decide if they want to share any data, to who they can share, who they share it with, to what extent, what's the period, and all that stuff. So we're paying a lot of attention to privacy and who owns the data, but we really believe that the producers of the data own that data.
I have a question then. So does that mean that they can actually take the data, the way you analyze it, and go somewhere else for that data to be used to provide similar service? What does that mean, ownership? I think that's a very interesting question nowadays. Like, can you take it with you and go somewhere else?
So when you have a relationship with a financial institution, you give them permission, you give them some of your data, and you give them permission to use some of the data. That bank could decide that they want to share the data with a third party, a fintech or a third party, to provide you with better services. But the bank needs to have full control over what's happening with the data, completely downstream all the way until the data comes back. So we've developed that platform, and others are doing it too, that controls complete privacy and security of the data all the way to the field level, not just to the field level, but if it's a zip code, how many digits can you share over someone's zip code so nobody can be truly identifiable? We provide the data with those permissions under those security provisions. Those fintechs can develop the algos and bring it back to the bank so the bank can execute it in their environment.
Okay.
So what the fintech is getting is actually mock-up data, it's synthesized data. It's not the real data.
Yeah, it's consistent to the way we think about it too. PII information is always separated from the information that we have and hold on the blockchain in terms of the physical gold ownership. So we separate those 2 parts, and of course we only share with those vendors that we absolutely have to. So for example, when we perform KYC or AML type of tests, we have to share data with certain third parties that validate that you're a good actor. But aside from that, we never sell any of the data, and we always want to protect that and keep that PII safe and secure for all our clients.
How realistic is that for the average consumer, though, right? Because you're dealing with institutions, they're very sophisticated, they have lawyers and all the compliance people, and they know what they're looking for and what they want to tell you and not tell you. But the average consumer, I mean, how many of us sign up for apps and there's like a long wall of legal text and we just hit the box so we can use the app, and then we didn't realize we're letting them use all of the data?
I'll get going. I mean, it also depends on what, age group you're in. I mean, my kids will give away any type of data without even blinking. I act a little bit differently. So it really depends on how you feel about sharing your data. I think that companies that have had breaches, whether it's credit agencies or what have you, or social networks, are being penalized. So I think that at least here in the United States, but I know it's happening around the world, when companies do have data breaches, they do get penalized. And I think that those penalties will just grow to be even bigger. So I think that the regulation and is starting to take care of making sure that our data is protected, because you're right, when you get those contracts, nobody reads the whole thing.
I actually think we're at a very interesting moment in time. And I think we're in a very interesting moment in time because we are running a series of global experiments, right? We are doing the ultimate A/B testing because most countries have different regulation around this. And so we're learning a little bit. The other thing that's happening simultaneously is the individual consumers are getting educated about how their data, and partly because of the different regulation, partly because different technology firms have taken different approaches to make that an advantage or depending on where you fall on that. Ultimately, consumers are going to have to decide, what am I getting in return for sharing this data? And some will argue that they've gotten enormous benefit from sharing their data, whether it's new services in financial institutions, whether it's new services through social media, whether it's the amazingly low cost of some things that could cost much more if there wasn't this digital world. And is that worth sharing that information? And so I think we're in this moment of time where we don't yet know how this will evolve, but all of those components are coming together through a series of experiments. And we're going to see as people choose platforms, because some platforms have frankly been less willing to share data and others have been more willing to share data. And are we seeing consumer choice begin to change? I think this is just, we're going to learn an enormous amount over the next months, years, decade, as to how this evolves. And I think we'll have new, frankly, regulatory frameworks that will evolve out of it.
Mm-hmm. But for the consumer to be able to choose, you need to have a choice. That means you need to be able to, like the data portability is a key issue. Same way that interoperability between platforms, because what's the point of saying, well, I can bring my data with me, or I want an alternative, but they need to be an alternative that is costless to me, so I actually can have a choice. And that's the notion of competition, and then, yes, I agree, then we will move forward in the right direction. However, whenever it comes to data, what belongs to you is, I think, a very difficult question to answer, because there's a difference between what you actually input and what is being learned from your behavior. And that specific data, I mean, so you have the raw information and then you have making sense of it, learning pattern that may be produced by the company collecting or the platform. And so one of the many challenges, but one that I see here is whenever we talk about data shareability, is what are you sharing? What type of information? In Australia, they did this open banking, and there was this notion of it's an open pool, and so all the banks, they do share the normal financial information. And if you are a tech company, let's say, that have some behavioral information, then you're supposed to be sharing the information that you use whenever you're going to offer the loan to the client that asks for. You need to be, you're supposed to be sharing that information to add to the pool of information, so everybody has access to the same information to provide the service of the consumer. And that was the initial proposal. The implementation of it is they still haven't figured out what should be shared. So it's a very, very, very tricky question. And that goes beyond the privacy, is this notion of ownership.
If I can build on that, if I may. I mean, the financial services industry, it's about sharing. And then I'm going to have a question for you, Riz, with your permission. The financial industry, with regards to the sharing economy, is following the footsteps of hospitality and transportation industries. So sharing, whether it's a new created digital asset, is becoming an essential component of how we do it, right? So decentralized ownership of an asset, which is essentially what Riz is doing, is something where we have to figure out how we share data. So here we are using blockchain technologies and others to ensure that the data is immutable and that the data is shared with the right people. So I wonder, Riz, when you guys think about how do you distribute, how do you decentralize the ownership of an ounce of gold, which I plan to buy from you at the end of the session here, how do you protect the data? How do you ensure that I know what part of the gold I own, that others don't have the same ownership and so forth?
Yeah, it's a great question. So I think I want to make 2 points. So first, I'll answer Ellie's question. So right now, what we do is we centralize it in the sense that only we and the auditors and other validators have access to what is your specific ownership. And your PII is, of course, segregated. We don't keep that. We only share it with those parties who validate that you're a good actor. That's it. We never sell any of your data or anything like that. What we don't do right now is we don't decentralize it in the sense of, let's say, a lot of various tokens or digital coins where it's available to send everywhere. The main reason we don't is because there's risk of transferring value to nefarious actors that can't be controlled. And so it's important that we, along with a few other trusted parties, do that. And so that's how we manage that. The second point that I want to make is about ownership of the data itself and who should control it. And I really believe that things like blockchain will be really very fundamental to this, in that in the future, each of us will control our data. And you'll be able to share it with whom you want. So right now, we're sort of living in a different world. Certain platforms actually have access to your data, essentially for free, and then they monetize it. So you don't get paid for that. But really, you should be paid for your data. It's about you at the end of the day. So a simple example might be, if you had all of your data that's important, so let's say, for example, healthcare records, your dentist only needs to know about your dental records. They don't need to know the rest of your health history at the end of the day, but your physician does. The company that's selling you a car needs to know about some part of your financial history. So different parties need to know or have access to different parts of your data. But right now, we're living in a world where we all sort of give our data for free, and we're not compensated for it, or we can't control it. Everybody can have access to it. And I believe that things like blockchain will allow us individually to control that data and then be able to share it with whom we want to, when we want to, and maybe even be compensated for it if we want to let you have access.
Can I ask two questions just to follow up on these? So one is, are we really not compensated?
Yeah.
Because you can look at the cost of services as technology rolls out, and if the cost of services come down materially, is that not a form of how do we think about what compensation really is? So that's one question. And then the second question is, blockchain has a ton of promise, right? But it's also not brand new. And so what's keeping it from, think about all the things we could do with a distributed ledger system. What's holding the system back from moving there, right? And just because you two are both in this in different forms, what is it?
So in terms of competition, look, I was talking earlier about the relationship between the platforms that we have today, the big platforms, the GAFA, the BetJ in Asia Pacific and so forth, and the relationship with the platform users. At the same time, there's a relationship with partners and collaborators or producers on those platforms. And that relationship with the latter is about, in the beginning, it's all about collaboration. Let's work together. But essentially, the relationship could turn into a competitive environment, because if you're a large retailer that hosts e-commerce shops, you see the cyclicality, you see all the cash flow, and you say, that's a nice business, I'd like to be in that business, and you start competing with those businesses. So the sense of competition is becoming a really sensitive topic. Today, with everything becoming as a service, banking is no different. And when you start talking about banking as a service, the large banks that have invested billions in capital, right, to deliver financial capabilities are now being pulled by brands, retailers, travel sites, what have you, any place where you have a financial transaction to provide some financial capabilities when they don't own the customer. So who now owns the customers? Who competes with who? Is the embedder the one that uses contextual finance or embedded finance is competing with the bank who's providing the financial services? So it's a really interesting dynamics, and it's happening in real time as we speak. We see our role at Finastra to provide banking as a service platform to enable. We are enabling our customers to declare that they are the bank as a service providers. We don't want to create any competition with our customers.
Yeah, I would say, with regards to the compensation, I think you raise a good point. Mm-hmm. This is really in the eye of the beholder. If you feel like you're being compensated fairly by virtue of the fact that you have access to a service and you're willing to give your personal information, then that seems like a pretty fair transaction. Of course, there's this other side, which we're now all coming to grips with, which is what happens when they violate that trust and give that information willingly or unwillingly to everybody in the world. And that means implications for you in terms of your privacy and all of that. Do they pay you back for it? I haven't heard of anybody doing that. So there is that trade-off. But of course, that's really for the individual to judge, is did I get compensated fairly for it? So that's part one, to your point. Part two, with blockchain, so I would say it's like just about every new technology that has come before it. It takes time. Of course, it has this huge promise, but it takes time. If we think about the internet was around for quite a long time before it actually really started to take off, which was really in the early days was 90s, but it had been around for quite a while prior to that. It wasn't like it was only invented in 1990. So many other technologies have gone the same way, where they've been around for a long time. It takes a while for them to get momentum and catch on. And I believe this is what's going to happen with blockchain too, is that we're still trying to figure out all the ways that we can use it and leverage it, and technology will get better that will make us capable of really amplifying what it can do. And I think people are still trying to come to grips with all the possibilities at the end of the day. As a practical experience, when I ran an investment management business, this is a pretty simple practical example. We used to have to share data with our auditors, with our administrators, with the different exchanges we dealt with, all these different parties, clients, and everyone had different sets of data that had to be reconciled. That was a expensive and tedious task at the end of the day. If it was all one singular set that could be just given to individual parties, that means everybody's got the same thing and they have access to one source of truth. And so that's a very simple application that can be leveraged. Or, for example, real estate ownership or car ownership. Think about that. If we can just record that on something that's immutable like the blockchain, we don't ever have to do a title search. This would be so much more efficient for every one of our lives, but everybody has to do this every time to do a transaction. So there are so many things that we can make more efficient by leveraging the technology. We haven't gotten there yet, but we will get there, I'm pretty convinced.
Eric, I forgot to answer your second question about blockchain. I mean, look, when you want to build a solution, you can go with a customized, completely vertically integrated, centralized system, and you want to get the best performance out of it. And if you go that route versus building a distributed system, you're going to get better results faster with that one, right? With the first one, building a completely vertically integrated, centralized system. But look at a couple of examples. Encarta versus Wikipedia, BlackBerry versus iOS, right? One of them stayed in business, one of them didn't. It takes time for a distributed system because of the heavy computing power that you have, because of the trust that everybody needs to build trust across the network to build momentum. When they build momentum, in 100% of the cases, they surpass the centralized solution. And that's why it takes time. So I think it's a maturity and a timing question in agreement with Riz.
Look, I actually very much believe in the technology, but there's been other technologies I've believed in as well. And what I'm trying to figure out is I take your point around the network effect. I do. But I also wonder, have we started to develop the skills to be able to do this at the rate and pace that we could? Are there misaligned incentives between who benefits from this and who actually bears the cost? There's just a bunch of things that I wonder, because the one thing we have seen is technology adoption has only increased, in fact, increased even faster in the last 2 years. And so, it's just a question of when do we hit that tipping point?
Soon.
Well, so is the future decentralized?
What was it, Kia?
Is the future decentralized in finance?
In my mind, it's absolutely decentralized, absolutely. And decentralized, I would go, so there's a whole, forum today or practice that's called DeFi, D-E-F-I, Distributed Decentralized Finance, DEFI. I think it's going to go further to become distributed finance. It'll be a DIFI eventually, where the systems will be completely distributed with no central authority that actually manages them. So it's a matter of time. The technology to make it happen is there. It's maturing over time. And I see that that's the future. Regulation will still be a part of that, because you just can't go without it completely. But again, the regulators are coming up to speed as well in learning how to adapt to the new technologies, how to learn them. We work very close with the regulators to work with them on how to develop the regulation, to educate them and so forth.
Are the regulators going
Pardon?
to get there and evolve? Are the regulators going to actually evolve and embrace
I believe so, because
decentralization?
that's going to be reality for everybody. Everybody in the ecosystem is going to have to come up to speed. It's not an option.
I think this has been common across a lot of tech for what it's worth. I think if you've seen a lot of the innovation in the last few years, it is the tech companies getting ahead of the regulators, right? I mean, look at very different industries. When Uber first started, it was effectively an arbitrage on regulation, right? Taxis were regulated, Ubers were not. If you look at what happened with Airbnb, it was an arbitrage. I mean, these were all, as these technologies evolve, I think this is one where the regulators will catch up. They do in every case, but some of the arbitrage will kind of get people over the hump.
Yeah, and the current system needs also to adjust because most of the, so we're talking about finance, but all the innovation that we're talking about is technological one. And so they need to be a reframing of a lot of the regulatory frameworks that exist out there to add that dimension. We are in the finance panel and we talk about data sharing, data privacy. All those things are new issues that come with the digitalization of the economy, not only the finance world. And they end up having an impact on a lot of different sectors. So there is movement. You see that even the Fed or the BIS recently, like 2 years finally, they pay attention to digital currencies, things that 3 or 4 years ago were not really thinkable. Only emerging central bank from emerging countries were seeing that as added value. So they're investigating, they try to understand how that works, how that fits with them, because I don't think that the future of finance is only decentralized, it's diversified. I do believe that central bank will remain. I'm an ex-central banker. So but they will evolve and maybe jointly with some digital authority that will tell them, well, you know, this is part of our world, this is part of your world, and we are, and things are moving much faster than expected. The pandemic for that, because of the strengthening of the digitalization, has been a good thing. So yes, regulators do adjust.
I guess I'll add something to it. So I'm perhaps not quite as bullish as Ellie is on decentralized, largely because I think governments have specific motivations to prevent true decentralization. At the end of the day, governments want to collect taxes in local currency. They want their currency to be successful. That's an important part of it. There's 180 currencies at the end of the day. Everybody doesn't convert to one. And this goes through thousands and thousands of years of history, that this has stood the test of time, and that countries want to have their own currencies, et cetera. So I think there'll be a very natural friction between governments and true decentralization. I think probably we'll have is some hybrid. There'll be some decentralization, and there'll be centralization as well for certain things, and there'll be a very natural push and pull. And in some sense, that's one of the reasons we did what we did, is because, of course, gold has sort of stood that test of time where it outdates all currencies, right? It predated all the currencies, and probably a good chance it'll outdate all currencies as well. But people all over the world can own it freely, and it's gone through that process. So, but I think there'll be a very natural friction here because there are competing forces.
You guys are about to be available in the US, correct?
It's now downloadable in the US, so thank you for the plug. Yep, and the ability to send, we're just waiting for approvals from the regulators to be able to actually send, as you mentioned, I kindly offered for me to send gold to everybody here. That'll be available hopefully soon once we get regulatory approval.
And so why aren't you available here yet? Like, why wasn't this the first market?
So we started in India. In many countries, the process of getting approvals to be able to launch apps are much easier. And so Eric kind of touched on it. Some places, it's not necessarily regulatory arbitrage, it's just that it's easier to operate in certain locations because there's one authority, one rule maker, and you just have to pass that test. In the United States, actually, unless you're a bank, which means you get a federal charter, money transmission or value transmission is actually governed at the state level. So therefore, you need to deal with 50 states. So that just adds a layer of complexity, time, et cetera, but all achievable. The good news is regulators, if you work with them, they can be pretty helpful, and I believe that we'll get there. And once we do, then I think the full capability of what we want to be able to do, which is make gold digital, mobile, and usable, becomes totally functional rather than what a lot of people claim that it is, which is a really expensive, good-looking paperweight.
Are there jurisdictions or countries that are doing a good job in terms of modern financial regulations?
I think Singapore is like a hub for that. They do have a lot of sandbox. They're really innovative, but I think that's part of the DNA of Singapore. And so there is eagerness to really try by doing, and so those concepts of sandbox are great. I do think that in the US, depending on the field, there is some effort. But from the top of my mind, I think Singapore would be the more eager to actually learn and share what can be learned with this new finance.
All right, shout out Singapore. What about privacy? I mean, I know we've talked before about GDPR and, much more privacy-forward frameworks. Is that something that we should get here in the US, especially with all the noise around certain large companies with a lot of data?
Look, GDPR started, of course, in Europe and all that. In the US, the national security interests are very strong, and as such, we're kind of not adapting those standards very quickly. And to the point that Claude made earlier about there are some countries where regulation is very is encouraging and allowing and promoting innovation also around data. Hong Kong Money Authority, Singapore, SMA, Money Authority. So it really depends on what country you're looking at.
Mm-hmm.
No?
Well, GDPR is great because, so it's interesting that to have all this focus on data and even regulation of big tech from Europe, which is the only one with not such an entity, so that's great. But you do see in Europe a lot of issue in the implementation of it. Even in this union that is supposed to be relatively harmonized, there is issue with different country implementations. So maybe there's something to learn. There is push here too. California has a set of disclosures which is very similar to that. So there is a push in adding transparency and protection. It would be, I think, beneficial for all if there were some coordination at the global level, so firms actually understand that there is a rule, and that would facilitate a lot of things. And sure, privacy is very important. On the consumer side, however, initially we're also talking about sharing the data and whether we get rewarded for the data that we're sharing. And I think that the easiness of doing things, finance included, is one of the big rewards, but it's not clear to me that the consumer itself fully understands what is meant to sharing the data and how it could impact them in the future. I don't really believe that you cannot share your information. It's all about accountability. Knowing the trade-offs that you're getting into would be also a big part of tomorrow and digitalization of the economy, not only finance.
Ellie, I have a question for you, which is a lot of what we've talked about today is very consumer-oriented, right? And yet there's an awful lot of financial flow that is B2B. And so I'd be curious, because some of these things are very different, and by the way, technology adoption can happen a little faster there. How do you see the differences in terms of the adoption for more B2B application versus consumer-oriented application?
So we're very strong in the B2B space. We do retail banking, but we do corporate banking, right, trade, syndicated lending, and payments and others, which are all B2B. In many of those B2B systems, our customers are still deployed on-premise, so to speak. We're modernizing our technology stack and taking them all to the cloud, but it's got to be working at a certain pace. And the adoption of data, because those systems, those B2B systems, are sometimes more centralized and more controlled, the adoption there, it creates less of a problem in terms of sharing the data, and it's not in the forefront. It's still close to the chest, so to speak, of those large institutions. With the platform that we've developed at Finastra, we're absolutely enabling those companies to share data in a very private and secure manner. And again, they always control what data is shared with who, to what extent, and when they stop doing all that.
what is holding them back from fully going not on-prem? I feel like I still keep reading stories about, oh, there's all these industries, they gotta have it on-prem. It's very, they're not moving that way yet.
So in my former life as the kind of leader of our tech media telecom practice, I think the notion of on-prem is probably a little bit of a misnomer, and you sort of alluded to that in some ways in the way there is kind of different architectures for how, and so cloud can happen in multiple ways. Cloud can happen when you're sitting on a public cloud server. Cloud can happen if you're actually set it up that way in a private cloud, and that private cloud could be hosted in your own data center, or it can be, and I think what you're finding is most enterprises are shifting to some form of hybrid cloud, which means they're not picking a single vendor, and they're not speaking one particular, they're not choosing to move everything into the public domain as opposed to in the private domain. And so I think there's much more that's happening. It's just not all happening where you're moving it all into the pure public. And part of that gets into, for some of these large institutions, and I think in banking in particular, the cost advantage of moving it into the cloud, into the public cloud, may not be as great as it is for smaller institutions.
Yeah.
But they're still adopting that technology.
Without a doubt. I mean, make no mistake about it. The dominant deployment model for software in the financial services industry will be public cloud, period. It's a question of time. We're working with a very advanced bank in Australia, for example, who has been encouraged by the regulators in this country to actually go to a public cloud. Now, they're not moving all the workflows. They're moving some of the workflows. It's not just because they don't want to move them because of privacy, security, and risk of data and so forth. It's because they've invested billions in capital to build data centers, and they want to amortize those all the way through, which is the right financial decision to make. But so you got to come to the market as a technology provider at Finastra with an approach that enables those banks to work in a hybrid model, and that's exactly what we're doing at Finastra. You can stay in your data center, you can run in another data center, you can run in a public data center, it doesn't matter to us. The technologies enable sharing of data. But the future, in our view, public cloud.
Yeah, we'll have an interesting debate about this. The only thing I will say is every one of the large cloud providers has now come out with their private cloud options, right? And there's a reason for that, which is it's actually what the customers are asking for.
Yeah, we're completely cloud-based, and we're moving towards cloud agnostic as well. The only challenge kind of related to this topic is that in certain countries, you have to retain the data very much locally. And so one of the challenges with cloud, of course, is that often the data is being backed up in different geographies. And so now we come back to that, David, privacy issue is that certain countries want their citizens or their government data retained only in that country. And so now you become quite restricted in terms of how you can do that.
Eric, to your point, if I may, on the public-private cloud, you're right. The public cloud companies are all coming out with options for private cloud because the customers of those private clouds, they want to leverage the capabilities and get the margins and the capabilities of the public cloud, but still in a private environment because it's a transitional period and it may take many years.
Yeah, I think the question will be how many years. I do think this notion of a lot of what's happening now is, if you will, creating the operating system for the cloud, and how do I operate that in multiple places? And there's a whole bunch of benefits to that, right? I get, if I were to compare it to an airline, right, one of the reasons one airline in particular chose to kind of operate only one aircraft is it's amazingly simple to train everyone. So if I have one operating system that works across my clouds, I can train everyone, right? I get my developers to start moving faster, I can start, so I think there is real benefit of moving in that direction. I think the question will be over what time do we see this sort of move in that direction.
What are the other sort of considerations that businesses and institutions should be thinking about? Because that is exactly what I was saying. We've been talking a lot about consumers, but there's companies in this whole story.
So moving to the cloud could be cyber risk? I don't know.
Look, I think we should just, my own sense is what has happened in terms of digitization across industries over the last 18 months is what took 10 years prior. There's been a massive shift. So I think we're now past the point of every company I see, whether it's in banking or any other industry, is thinking about how it can be disrupted and how it actually does that disruption itself. And it's looking at how it even does all of its operations, right? So the number of digital manufacturing plants that are coming online today, right, leveraging automation, it's just different than when it was before, right? How do I think about kind of building new businesses that might actually attack my own, right? Whether that's the new digital bank, whether that's new digital services, how do I, whether it's new kind of data-related services, how do I do that today is what's going on. So I think every company that succeeds is going to look at how do I disrupt myself before I am disrupted? Because in many ways, what we started with is all these amazing disruptions in one industry. But that's true every industry. And so I think what's going on now in business is every company is looking at that.
How are you disrupting McKinsey?
Well, I mean, we have disrupted ourselves. I mean, there's actually been articles written about it. If you think about, services that we now have, several thousand data engineers, and that's a huge change for how we do what we do, data scientists, because there's a big difference in how we deliver the impact versus what we did before. We have much more expertise at very, very specific levels, right? So there's a lot of what we're doing that is quite disruptive to our own industry, for sure.
Yeah, I think for us, it's all about how can we make things easier. And I believe overall, it's an exciting time, really exciting time for all consumers, because I think all companies are thinking about how to leverage digital and make things easier, faster, more efficient for them. And so I believe at Gilded, that's what it's all about for us too, is taking something that's been around for 3,500 years that largely hasn't changed in the way it's operated, but bringing it to the 21st century and using, things that are very well understood, like a mobile phone and a mobile app, and blockchain, which is becoming more and more well understood, and leveraging that technology to make something that people have desired for such a long time and making it functional. And so that's what it's really about, and I believe that's what most companies are trying to do these days, is make things for their end customers easier to use, so simpler and faster.
So with regards to disruption, at Finastra, we're using a framework from Jeffrey Moore. It's called Zone to Win. And we're all lucky enough to work for Simon Paris, our chief executive, who's a brilliant man that can truly see around corners. And what we decided to do is put our platform and banking as a service as disrupting technology. But in the course of doing that, we're changing the existing core banking solutions that we've been providing to the industry for the last 40 plus years. So we are absolutely self-disrupting ourselves, the way we approach the market, the way we go to market, the way we sell those solutions. It's all for the benefit of our customers, their shareholders, and the community.
All right, we're almost out of time. So any last parting thoughts on the digital future of finance? Anyone?
It's bright. No, it's bright. I know we see that there is a lot of challenges ahead, but what we learned from the pandemic is the resilience of individuals, of companies, and ability to adjust. I do believe that it will require really, because that's the fourth industrial revolution, it's not only in finance, so it's very much a reset and tackling a lot of issues from a different angle. You were talking about Uber, that means all the labor law need to be adjusted. We talk about data, we talk about consumer. We didn't really talk about how much consumer need to educate itself also to really be able to leverage all those things. So it's going to be a very different type of growth because it's not coming from within. It's actually forced by technology, which is something outside.
I just think we're going through an enormous period of disruption, right? And I think the world is going to look very, very different a year from now, 3 years from now, 5 years from now, and the rate and pace at which this happens is going to be incredibly fast. And you see it in parts of it. I mean, we all see it in the way we do payments today, right? That's vastly different than it was before. And I just think you're going to see that accelerate as we look forward.
Yeah, my hope is that it can be more evenly distributed than it has been, in the sense that there is a little bit of the haves and have-nots in certain countries and certain parts of the world. A lot of people have access to certain things that many other parts of the world don't, and so they're really being left behind. So I think it would be really important that in the years to come that it becomes widely distributed so everybody has global access.
Very briefly, we're going out of time. I hope nothing is going to explode. It's almost zero, like a James Bond movie. We're people that have been in the financial services industry for decades, and I heard it through multiple panels here in the conference, have said that this is a really, really exciting time in the financial services, with the disruption, with the bundling, rebundling, unbundling of the financial services. So we're really at an exciting time where the distribution is happening, the sharing economy is coming, everything as a service is becoming real, the technologies that enable it are becoming more mature over time. So like Eric says and the other panelists, a very interesting period of digital disruption, and which is really, really a lot of fun.
Mm-hmm. Fun.
Well, thank you, everyone, and thank you for sitting through our panel. That's it. Thank you.
Mm-hmm.
Thank you, everybody.
We hope you enjoyed the discussion. Please make your way to the next session.